Hey everyone, and welcome to a deep dive into a topic that, well, might seem a bit dry at first. Financial markets.
Yeah, definitely not the most exciting thing at first glance.
Right, but we're taking that source material you all sent, Structure of Financial Markets,
Good stuff.
and we're going to extract the need-to-know info, make it clear, make it fun,
Absolutely.
so you can really understand how this whole system works.
Because it's fascinating, honestly.
Yeah, and it impacts everyone, right?
Absolutely.
Even if you aren't, working on Wall Street, it still affects you.
Every day.
Yeah.
In ways you might not even realize.
Exactly. So let's start with the basics. Our source kicks things off by breaking down financial markets into two main camps, money markets and capital markets.
And the key difference really boils down to time horizon. Money markets, we're talking short-term debt securities. Things like treasury bills, certificates of deposit.
Right.
Very low risk, especially those backed by the government.
So that high-yield savings account that I've been, sort of looking at,
Exactly.
that's the money market.
That's it. That's the money market in action. You're essentially lending your money out for a short period, earning a small return.
Gotcha.
Now, if you're looking for potentially higher returns, obviously a bit more risk involved.
Yeah.
That's where capital markets come in.
Okay.
This is where you're talking stocks, bonds being traded, companies issuing new securities, investors buying and selling existing ones.
So instead of parking my money for a few months in a CD, I might say invest in a tech giant like Google or Facebook, hoping that their stock price grows over, a longer period of time.
And our source highlights how that long-term growth potential is a big draw for investors in capital markets.
Makes sense. Yeah.
However, gotta remember, higher potential returns often means higher risk.
For sure.
Capital markets can be volatile,
Oh, yeah.
influenced by a whole bunch of factors, economic conditions, company performance.
It's a balancing act, right?
It is.
Reward versus risk.
Precisely. And understanding that balance, that's key to navigating this whole world of financial markets effectively.
Speaking of navigating, our source also digs into the distinction between primary and secondary markets.
Right.
And I'll admit, those terms always kind of intimidated me.
Yeah, they sound a little scary, don't they?
But they're actually pretty straightforward.
Once you grasp the concept.
Yes, once you get past the jargon.
Exactly.
So break it down for us.
Think of the primary market as the initial launch pad. This is where companies, they're issuing new stocks or bonds to raise capital, often through what's known as an IPO, an initial public offering.
Okay, so that's the big moment when a company's stock is first available to the public.
Exactly.
And you hear about those stories, people making a ton of money or losing it.
It happens. But what's interesting is most of the action, the trading activity, actually takes place in the secondary market.
Okay.
This is where investors are buying and selling those existing securities among themselves. Price is determined by, you guessed it, supply and demand.
So if I'm, let's say, going back to Google, if I buy Google stock today, I'm not buying it from Google directly.
No, you're buying it from another investor who's selling their shares. And the price you pay, that reflects the current market value, which is, as you know, fluctuating constantly.
It's like this whole marketplace where the prices are being determined in real time by, all these buyers and sellers.
It's a dynamic system.
And speaking of dynamic, our source really emphasizes how interconnected all of this is to the broader economy. It really makes you think about, we always hear about Wall Street and then Main Street.
Right, exactly.
And they seem so separate, but they're really not.
Not at all.
They're very much connected.
Absolutely. Yeah, they're deeply intertwined, like you said, with our everyday lives, even if we don't always see the direct connection.
Yeah, totally. Give me an example.
Okay, we'll take interest rates, for instance. Those are directly influenced by how money's flowing within these markets.
Oh, interesting.
Yeah, so when there's a lot of activity, high demand for capital, interest rates, they tend to rise.
Makes sense.
And vice versa, if things slow down, rates usually follow.
Huh. So that loan, I'm considering for a new car,
Yeah.
the interest rate on that is connected to what's happening on Wall Street.
In a way, yeah, you could say that it all ties back together. Our source actually points to the 2008 financial crisis as a prime example of this interconnectedness.
Oh, right, yeah.
When the markets crashed, remember, it sent shockwaves through the entire economy.
It's a crazy time.
Credit dried up, interest rates, they shot up, and it became way harder for businesses and regular people to get the money they needed.
Wow, it's like this domino effect. One thing impacts another, and suddenly...
It's all connected.
Yeah, crazy. It makes you realize, these markets, they really need to function smoothly for everyone's sake.
Absolutely, for the whole system to work.
Right, exactly. But going back to like different types of investments, because I found that really
Oh,
interesting.
sure.
Um, our source also talked about this thing, exchange traded funds.
ETFs, yeah, they're very popular these days.
Yeah. Have you ever like invested in those?
I have. I have.
I've been hearing a lot about them, but I don't totally understand.
Sure. So basically, imagine a basket, right?
Nah.
And in this basket, you've got different assets like stocks or bonds,
Okay.
but they're grouped together strategically, maybe by sector, like all tech companies, or based on a specific investment strategy.
So instead of putting all my money into like one company's stock,
Which can be risky.
very risky. I could buy an ETF that like covers the entire, say, tech sector.
Precisely. It's like instant diversification.
Oh, that's smart.
Right, which is a huge advantage for investors, as our source explains.
Spread that risk out.
Exactly. And this innovation, ETFs, they've actually changed the structure of financial markets quite a bit,
Really.
giving people more accessible, more diversified options.
It's like a one-stop shop.
In a way, yeah, for sure.
That's cool. But it makes you wonder, with all this new stuff, where do we go from here? Our source seemed to emphasize how much technology is changing the game. It's kind of wild to think about, technology just changing how like the whole financial world works.
It really is.
It's not even just like online trading anymore. It's like algorithms, right?
Exactly. Our source even mentioned this thing called high-frequency trading.
Oh yeah, I've heard that term, but I don't really.
It's pretty intense. Basically, powerful computers making trades in like fractions of a second,
Oh.
taking advantage of these tiny price differences that honestly most people wouldn't even notice.
Wow, so it's like a whole other level.
Oh, absolutely. It's like the major leagues of trading.
And it makes you wonder, like, can regulators even keep up with all of this?
That's the thing, right? Our source talked about how they're always playing catch up,
Yeah, makes sense.
trying to create rules and safeguards for something that's changing so fast.
Right, because how do you even, I don't know.
Oh,
It's moving target.
It is. And it's not just speed either. Like there's this whole other wave of tech coming, like blockchain.
Oh, right, yeah, with the cryptocurrencies and everything.
Exactly. That has the potential to like totally revolutionize how we think about financial transactions.
It's exciting, but also, I gotta admit, a little intimidating. Like, who knows what's next?
Right.
What's around the corner?
Who knows what we'll even be talking about in 5 years even.
And the source actually left us with this question I thought was really interesting. With all this rapid change, what innovations do you think will shape, like, the future of finance?
It's a great question. Will it be AI managing our portfolios? Will we all be using decentralized finance? It's kind of mind-blowing to even think about.
Well, I think that's a good note to end on, honestly. We've covered a lot today. Started with those basics: money markets, capital markets.
Right, we talked about risk, reward,
Primary, secondary markets.
the impact on interest rates, remember that?
Oh, yeah, the 2008 crisis even came up. But then all this new stuff, ETFs, high-frequency trading.
The future of it all with blockchain.
It's a lot to take in.
It really is, but it's fascinating stuff and honestly important to understand even if you're not, a Wall Street whiz.
Absolutely. Like you said at the beginning, it impacts all of us, whether we realize it or not.
Every day.
So I hope you all learned something today. I know I did.
Me too.
And until next time, keep exploring, keep learning.